New market and CPI data just came out today, and this is very important. It's making the stock market do very exciting things, but the most important thing we need to know right now is how do we invest with this information? The S&P 500 is up 1% already in one day. QQQ is up 1.32% today. And even SCHD is up over 0.6% and up over that $80 mark, which is very nice to see. CPI data was just released and most of it was good news, which is why the markets are booming today. But I want you to beware because this is the part where a lot of investors get very hung up, and this is where people can really lose some money. I'm going to explain the information that was released today, but even more importantly, I'm going to explain how to invest for the rest of 2024 and how I'm personally investing. Things are going to be changing quickly. I'm Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified.
Now let's go to CPI, shall we? These are the April reads, of course. Headline up 0.3, a little cooler than the rearview mirror, which was up 0.4. I haven't seen revisions. They were late yesterday in coming. If we look at the ex-food and energy, also up 0.3, and last month that was also up 0.4. So that definitely cooling off as expected on that. Now, let's look at the year-over-year numbers, probably the most important. 3.4 is the year-over-year headline, and that is 1/10 cooler than the rearview mirror, equal to expectations, and that is the lowest year-over-year since we're at, well, 3.2 in February. See, last month was the pop. And if we look at CPI X food and energy year over year, this is 3.6. That is definitely cooler than the 3.8 we had last time. And the 3.8 last time, and along with the 3.6 this time, is now the lowest level of year over year core inflation since April of 21. So these numbers are close to expectations in every way, and actually sequentially a bit better than last month, which spiked. You see yields moving down. Now, we're not done with the data yet. I like to look at the CPI index because I think the CPI index is very important to look at. 313.54 is the non-seasonally adjusted, and guess what? That's a new all-time high. And if we look at the core at 317.62, that's also a new all-time high. So here's what we really see. The politicians are going to say, wow, it's a bit cooler than expected. And in many ways, they're correct. But it's still on the indexes, both seasonally adjusted, non-seasonally adjusted, the highest ever since record keeping, the index that we figure all this on.
So what he basically said was that this last month was finally better than the month prior. And year over year, we're doing much better too with bringing down inflation. The April Consumer Price Index data released Wednesday morning by the US Bureau of Labor Statistics showed a year over year gain of 3.4%, compared with March's 3.5% increase. Keep in mind here that it is still a 3.4% gain, which means that inflation is still up, it's just up less than it was the month before. Headline inflation was 0.3% on a monthly basis in April, slightly softer than the 0.4% increase in prices economists expected. The monthly pace of inflation was also 0.4% in March and February. These numbers are great, but here's some more information to consider. Super cautious Fed officials will need to see several consecutive months of evidence showing inflation, which is proving far stickier than had been hoped, is really heading back to the 2% target before they consider a pivot on monetary policy. As it is, both core and headline CPI inflation remain above 3%, and services price growth remains stubbornly north of 5% in a year-on-year terms. In particular, shelter inflation is still too high. It's come in at a monthly pace of 0.4% for the past 3 consecutive months and landed at 5.5% year over year in April. So how to invest with this information? Because yes, today, markets are booming and we're at all-time highs. This is making people FOMO in, but is this the best time to be investing? Now, because most of this was very positive news, and it does look like we're in a pattern or trajectory of bringing inflation down, people are being very smart and seeing that if that is the case, then we're going to have the Feds cut the rate, and when that rate cut happens, that market's gonna super boom. If inflation does actually drop, then that's going to make it so that consumers and just the economy in general are going to be working a lot stronger, which means that we're building back up, which means the stock market's going to go up, and that's good news for investors. Keep in mind that last little thing that I just shared though. Yes, this is good news that inflation is dropping a bit, but we're still very far away from the target that the Fed officials want us to be at, which is at 2%. It would be the wrong move to do any type of rate cut now because this is just 1 month of good information. We need to see at a minimum 2-3 months of consecutive good information for the Fed to even think about cutting the rates. So how am I investing with this information? The market's at all-time highs today. Is it really a good time to be investing in it, or should we let it drop a little bit once everything kind of settles down? Here's the thing. Yes, we are at all-time highs right now. The market's super high, so this doesn't seem like the best time to be investing. But keep in mind, this is happening and the Fed hasn't even cut the rates yet. This is all just people expecting things to happen when the rate cut does possibly happen. I promise you that when there's actual news that the Fed is actually going to make this rate cut, or if the rate cut actually does happen, that's when things are going to go crazy in the stock market, and you will have wished that you would have had money invested in there. Right now is an accumulation period to be investing even at all-time highs, or at least that's how I'm investing. Most of my investing right now is going to be business as usual, though there is a possibility that the market could drop. Remember, the market just spiked right now on a bunch of good news. If next month, though, the numbers come out and it's not good news, expect that market to drop. For 90 to 95% of my investable money each month, I'm going to just be investing in my 3 ETF portfolio that I talk about all the time on this channel. Whether that's in the Roth IRA, 401k, brokerage account, that's how I'm going to be investing. But 5 to 10% of my money is going to be put off to the side in a high yield savings account that's getting an average of 4 to 5% guaranteed. Because like I said, there is a possibility that the market could still drop. We're still in volatility. We're still kind of sitting on the edge of our seats waiting to see what's going to actually happen with this inflation. If we have multiple months in a row of inflation dropping, we will see some rate cuts happen, and that's when the stock market will go up, and so that will have been good that 90 to 95% of my money has been invested. But just in case, if it were to drop a bunch because we have a bad month or two and the market drops, that's when I'm going to take some of that money that's on the sideline and throw it in. I know I'm going to hear that that's kind of timing the market, but it's also being safe and being smart based off of the data that I'm presented. So this is just somewhat of a hedge. It also helps me psychologically be able to keep investing and keep investing strong. Obviously, do what's best for you and your risk profile and whatever's going to help you sleep at night. Inevitably, you may think that you can outsmart the market and you think that you can use a lot of this data to really start timing things and hold all of your money off to the side until it drops big or something. And the problem is that there's no guarantee that it's either going to go down or go up. The best way to invest that I've found and has the most amount of data is to dollar cost average monthly no matter what, and just keep going strong while keeping emotions out of it and stay the pace. There's a reason why the best group of people in investing over a 20-year period are either dead or they lost their password and they can't touch their account. And the reason is both of those groups of people couldn't mess with their investing when emotions were high or low. They just kept it going. To see what to invest in, here's the video on my 3-fund portfolio, or watch this video to keep you going strong in your investing journey.